Hello, everybody, and welcome to another episode of the Kelly and Paul Show. And we've got a guest today, Kyla Lamb from Aspire CPA. Is that correct? Oh, sorry,
Yeah.
Kyla, I should have had that written out before I jumped into that. I was hoping you'd have it on your screen, actually. Um, Joining us from beautiful, where are you?
Vermeer.
In
I'm
Vermeer.
in Vermeer. Yeah, we're about an hour and a half southwest of Banff.
Okay, awesome. So you're primarily a virtual accounting firm, and so it doesn't really matter where people are, whether we're on Vancouver Island here, like Paul and I, or in the interior, like other clients we have, or I think you even cover into Alberta and beyond, right?
Yeah, we have clients into Alberta and Saskatchewan both.
Right on. So today I really want to talk about what's the difference between sole prop, or why would someone go from either a sole proprietor and then incorporate, or if they're starting a new business, what's the pros and cons of each structure?
Cool.
Uh,
So,
Shall we
yeah.
start with the easy one? Somebody that's thinking of starting a business. So most people go down the route of, well, I'm going to be sole prop because they think being incorporated costs too much money at the start. So, Kyla, why not start straight away as a incorporated company?
So I think one of the biggest things to think about is if you think your business is going to get to a point where it's going to incorporate in the first couple of years of operation, because the business entity, when it's run as a sole prop, is really part of you as a person, even if you have a trade name for that business. And so all of your accounts are tied to your personal name, including GST, PST, WorkSafe, your bank account. That's all part of you as a person from a tax perspective and a regulatory perspective. So if in the next couple of years you incorporate, you have to deal with closing down all of those accounts and set up a whole new set. So anyone that's looking at starting a business knows how much work it is to go through talking to the government and getting all those accounts set up. So you're going to have to close them all and reopen a new set of accounts, and how that might affect things like if you're getting funding, because really the funding is going to whoever the business is. So if you get funding as a sole proprietor, you're going to have to get permission to change that to a corporation. So there could be a lot of complications as far as transitioning the entire business into a corporation, especially if it's going to be in those first couple of years. It's going to be a lot of work for you to make that transition.
And to add to that, of course, if you start off incorporated, you're not trading. Whereas if you're a sole proprietor and then you suddenly decide to incorporate, you've got to do that and keep running your business at the same time, which is an additional
Exactly.
headache. So yeah, I would say look to the future, and if you're going to do it in the next 24 to 36 months, consider doing it straight away because
Absolutely.
it'll save a headache.
Yeah.
Okay, so what about a company that didn't have the foresight? They've been trading for a while and they go, okay, maybe I should incorporate now. What is the benefit to them as a person? And then let's look at the benefit of the business.
So the ways they're going to benefit as a person is it's going to separate their personal assets from the company. So they're going to get a layer of liability protection because all of the business activities now traded inside a corp, which is a separate legal entity. One of the other benefits of being incorporated is, especially if you're want to reinvest in your company and you're not wanting to draw out all of the earnings that your business makes to you personally, when you're incorporated, all of the profit of your company, rather you, regardless of whether you take the cash out of the business, is being taxed. And in Canada, we have marginal tax rates. So the more money you make, the higher tax you pay on every dollar. If you're incorporated, we have a flat corporate tax rate of 11%, and you're only going to be taxed on your personal tax return based on the cash you draw out. So if you are continuing to draw out all the profit that your business makes in the corporation into your personal hands, you're going to be in the same place tax wise, income tax wise. I'll talk about CPP in a minute. But if you're wanting to reinvest your cash in your business and you're not drawing it all out, you're going to have tax savings because you're only going to pay tax at the corporate tax rate on all of the revenue that the business is making. But a really important thing that's changing, and a lot of people are aware what's happening with our CPP program. So when you're self-employed, you are required to pay CPP on your self-employment earnings. And because you're sort of the employer and the employee, you pay both sides. So for 2023, that's going to be almost 12% of the net income of a business up to $66,000, you're going to pay CPP on. So that's going to total about $7,500. And as I said, that program has been building over the last few years. In comparison, in 2020, a business owner would have only paid about $5,800 for that CPP benefit. So in 3 years, we're looking at an increase of $1,700 just in CPP premiums that self-employed people are going to pay if they make over $66,000 in their business. If you incorporate, you have the choice as the shareholder that works in a business, and there are rules around it, and your specific circumstances would need to be discussed with a tax professional, but you can choose whether to compensate the work you do in the business as salaries or dividends. And if you opt to take dividends, you don't have to pay CPP on it. So all of that CPP money, and there's lots of reasons why some people like CPP and don't like CPP, but that would be about $7,500 of savings that you could redirect to other things in your life, private life insurance, private disability insurance, or investing in your own savings for retirement.
Okay. Kelly, is there anything from a bookkeeping point of view is it between the person and an incorporation?
Well, again, just to reiterate that exactly what Kyla said, that the CRA doesn't actually see any difference between the business and the individual as a taxpayer, as a sole proprietorship. Like, yes, you get a business number, that's for your GST, that is for your payroll account, that is for all of those things. But there's no investing back in your business. They assume you're taking all the money out, regardless of what's in the bank account for the business. They assume you're taking all that money out, less the expenses, and that's what you're taxed on. So it's just like it's very challenging because small business and Small Business Week, everyone pumps people up. And yes, sole proprietors are businesses too. Yes, they are, but not a separate entity as far as CRA is concerned. So yeah, just really look at that. And then we usually see, when people want to do it for tax purposes, we say, okay, who's the CPA you're working with? Because that's getting into tax planning, and that's really where your CPAs are worth their weight in gold and beyond. Sometimes people do it, yes, for the liability purpose that Kyla mentioned. And then the other reason would be if they want either next generation to come in and to be able to purchase the business while it's still running and while you're still active and part of it, and reduce some of the costs, you can transfer shares that way. So succession planning.
Yeah, and I on a minor note too, I'm definitely seeing people incorporating because there's more funding available if you're incorporated, or depending on the industry that you operate in, there could be some regulations around your business being incorporated to even, be able to get licensing or that sort of thing too. So those are some of the more minor considerations, but part of the conversation.
Oh, totally. Yeah, I've got a couple of clients who want to start a business. We've looked into it, and they have to be incorporated. Their industry and the regulations say that, you can't be a sole entity. You have to be, and obviously there's an insurance tied to that and also sorts of liability. So speaking of liabilities, we talked about that as a sole prop, you're liable, but as a incorporation, if you're a director, then you still have liability.
You do still have liability. So as a director of a corporation, you are the sort of the mind and matter of the company, and you can execute on behalf of it. When you are director, you do have responsibilities for tax liabilities to CRA still, and they can still come after you personally for tax liabilities if you're not making your source deduction payments or your PST payments. They still have recourse to you personally. And the other thing that I see in corporations around, especially financing, is when shareholders or people related to shareholders do personal guarantees to get financing, is you're then exposing, you're kind of opening up that curtain that you tried to close when you incorporated back again to allow that financer that's securing debt with a guarantee to come after your personal assets to settle that. So there are still but overall, if someone slips in your business and you're incorporated, you are protecting your personal assets from any action in relative to day-to-day type matters.
Yes, yes. So you mentioned about personal guarantees and stuff. So incorporation is quite a good way to raise funds through shareholder releasing shares and so forth. What is there any other benefits other than the ones we've talked about and fundraising, Kelly?
Those are the top three that we usually see. I'm sure Kyla sees a lot more than we do. Usually when someone says I need to incorporate, it's because they've had lunch or dinner or drinks with somebody else who's in business, says, "Oh, you should be incorporated. I save so much money in tax." And yes, you might be able to, but again, if you want to do it for savings and tax purposes, then definitely talk to a CPA.
Oh, definitely.
Yeah, definitely glad to have those conversations and, really getting to know people, what their current circumstances are, what the future holds for them, and walking them through sort of, yes, it might cost you more now, but these are going to be the benefits down the road, or this is how things could be done differently. And I think, being really careful of some of the urban legends around incorporating that are out there, because there have been some pretty substantial tax changes. I would say in the last 5 to 6 years, one of them being tax on split income, and the other one being what they call the SIBI rules, or the specified investment income rules, that are changing how we can use corps and how we used to tax plan. So just really caution people. I mean, it's good to do research and get out there and get yourself familiar with things, but there have been some pretty substantial changes to essentially close loopholes on incorporating some of the tax benefits we used to plan around.
So there's no one trigger point, would you say, that would go, as you said before, it's down to individual circumstances?
I used to say $100,000 from the tax savings standpoint, but again, it really depends on what you're doing with the profit in your business. If you're taking it all personally anyway, you're going to save the same tax. But again, that the CPP conversation we just had, to me, is a significant one. And I have a number of clients that are definitely below that $100,000, but just for the CPP, they're in the younger generation. They're hesitant about what CPP is going to look like when they retire. I do also mention that CPP does provide a disability benefit and survivor benefits, if those are important to you as well. That's another conversation I'm having with more people as they think about CPP just for retirement, but there are other benefits that come out of that program, depending on, if you do have a spouse, or if you're worried about getting hurt and you don't have those kind of programs for yourself or benefits for yourself externally, especially when you're self-employed, because you're less likely to have those benefit programs, in my experience, especially at that sole prop level, because you're trying to save money and you're trying to invest in your business. And so you're like, oh, I'll just wait a little bit longer before I get myself benefits. But those are some important considerations, because the CPP program does provide those additional ones if they make sense for you.
Cool. So decide to incorporate. What are the possible downsides of incorporating? I hear clients talk to me, God, it just seems to be so much, so much T's to cross and so many more I's to dot, and the bookkeeper's always watching us so closely.
No, asking for a friend, Paul?
No.
I would say, almost the inverse of the first point you made, Paul, about, if you think you're going to be incorporated in 2 to 3 years, incorporate to start. The inverse of that is, if you're maybe not quite sure where this is going for you, is it just, is it I don't want to say a hobby business, but a side business, or, if you're not really sure where it's going, or if it's even going to be a success in your particular area, it is definitely much easier to close down a sole prop and get that wound up and dealt with. That being said, I recently had a client here in the office, and things didn't work out, and we got them started up and closed out a corporation for them in less than 2 years. And it was, we worked with them, we kept in touch, and we just, in the long run, did it cost them a little bit more money while they saved the CPP costs? But, for them, it was a licensing thing. It was an insurance thing. They needed to be incorporated, and that's why they went down that road. But it really wasn't that terribly onerous to get that business wrapped up either. But certainly easier for a sole prop, and easier just to sort of feel things out and see if it's what you want to do, especially if you're new to business.
Cool. Kelly, from a bookkeeping point of view, is there much difference?
Well, yeah, I mean, there's a different aspect. The forms we fill out for year end, like your year end is your personal tax year end. There's essentially it comes out to an income statement as part of the tax package. I'm going to throw out a CRA form number here. Sorry, T2125 is how we sort that one out. So that is something that a tax person, we have a tax person within our firm that can handle that. And we do them within our firm, but we do not do T2s. So that is the tax form for the corporation. That's when we like to partner with all of our CPAs that we work with, like Kyla, all over, and just sort of say, and then we put together a really nice package for them. All of our CPAs usually are quite delighted, and we can turn that around for them fairly quickly. And we consider our scorecard the adjusting entries that we get from the accountants back. And usually if it's a small number, that's usually a good thing.
Cool.
Yeah.
Awesome.
The one,
Sorry, go on, Karen.
yeah, I think the one thing that I see as well, the difference between sole prop and corporation is the amount of record keeping required around your house and your vehicle. If you're incorporated, it reduces the amount of record keeping quite substantially. You know, we have a policy of using a mileage charge, but you're not permitted to use the mileage charge when you're a sole prop. And we can also do more of like a rent approximation for business use, a home and a corp. And whereas if you are a sole prop, you're required to have all of your exact numbers and calculate your square footage. And those things like to get looked at by CRA as well too.
Cool. Okay. Do we have any closing comments, remarks, suggestions, guidance, or is it just...
I just have one question, and it's only because it's come up, and I'm sorry, I am asking for a client, not anyone that anybody else here knows. Does a corporation really need its own bank account? Like they've got a business account with the bank in their sole prop name. Does it really need to change? Do they really need all new stuff?
Yes.
That's a short answer.
If you don't, you do not want to be on the wrong side of CRA. Okay, and so on that note, if you decide to incorporate, make sure you actually pay for your shares and deposit that money into the corporation's bank account, specifying it's for payment of your shares, because I have seen a lot of very sad people that could not prove that to CRA. So very, very important. And, you know, I'm a strong proponent for using a lawyer, especially if you ever think that you're going to generate funds for your business through share issuance. Get a lawyer and get those shares, classes and structure set up properly to allow you to do that in the long run too.
Totally.
Yeah, great investment.
Themselves, yeah. For what it costs in terms of percentage of starting the business, just go to a lawyer and go, here's my check.
Here's what I want to do.
Yeah.
Here's how I want to do it. This is what I want to do right now. This is what I want to do in 3 years. This is what I'm hoping to do in 10.
Yeah. And, you know, a lot of the great lawyers that I work with, as soon as the client says, oh, hey, Kyla sent me here, they just, you know, we've already had those conversations. We want to know where things are going, and the lawyer makes it happen. Yeah. And then as well, you know, we're seeing these registries come up with shareholder registries and land title registries and all of that kind of stuff. And the lawyers are keeping on top of that and making sure your corporate minute book is compliant, and you're not going to run into issues down the road with anything to do with that either.
Okay, so my final question to you two, which is more about marketing and business. Are you more likely to use a sole proprietor or an incorporated company if they provide the same service? Does it create more trust?
I think it does in some respects. But I think it can be created a lot of ways, because I know a lot of businesses. I think it depends if you're in a small town or in a city and how you really know if they're incorporated or not. Yes. You know, if you're walking into a store on Main Street in Invermere, people don't know whether that's incorporated or not. Yeah. So I think it really depends on the industry and the type of service and the relationship that you're looking for. Mm-hmm. You know, that's kind of my thoughts on it. And again, I come from a smaller market where there is definitely more sole props and partnerships than corps, but certainly drawing on my experience from the city, I'd say corporation all the way.
Yeah, I would say we've got some terrific clients that are sole props that are great people that are not fly by night, but it does suggest a little more permanency when you are incorporated, that you've gone through the work and the expense to go and get it done, and it's an investment in your company.
Yay, we're on the same page. Okay, any final comments, Kyla or Kelly?
Nothing for me. Thanks, Kyla, very much for coming and doing this. I know it's a question we get asked a lot, and it's nice to have the perspective from the CPA's point of view. So that's really helpful.
Awesome. Thank you so much for inviting me to join you today.
Cool. Awesome. Have a wonderful...
Oh, I do have one more. If anyone wants, do you have a library or resources or anything, if people have more questions on this, Kyla, that people can go to your website or something that we can add?
I in all actuality do not have anything on my website, but you can certainly use the contact form there and reach out to us.
Awesome.
If only you knew somebody that could create a resource page for you.
For those who are looking for a checklist, yes, Paul did very kindly help us generate a resource page on our website. So you can go to carvesolutions.ca, and there's a checklist for what to do once you've decided to go from sole prop to corporation. And yeah, it's talk to a CPA, and I think use a lawyer, I think, are number one and number two.
Yeah.
Awesome.
First and then decide. Yeah.